You said this time would be different. You told yourself you'd changed, that the late night promises, the hard lessons, the quiet failures, they had shaped you, strengthened you, prepared you. You stared at your screen with discipline. You set your levels. You journaled. You swore you wouldn't make the same mistakes again. And yet, here you are. The market turns red. Your palms sweat. Your chest tightens. You zoom in, zoom out. But deep down, you already know how this ends. Not because this moment is new, but because it's not. You've been here before, over and over, the same emotion, the same spiral, just a different candle. It always starts with hope, doesn't it? A little win, a clean setup, that feeling of finally getting it. Then you size up, you click faster, you stop listening, the plan becomes flexible, the rules become optional, and the loop begins again. You know this isn't the first time, but somehow it still surprises you. You look at your charts like they betrayed you, like they conspired against your logic. But the betrayal didn't come from the market. It came from you, from the lie you keep telling yourself, I'm in control. You want to believe that more knowledge, more indicators, more experience will finally give you power over this chaos. But trading was never about control. It's a mirror, a brutal one. And every time you think you've tamed it, it shows you the truth. Louder, harsher, and more honestly than anything else in your life. Because the chart doesn't care about your goals, your bills, your streak, your story. It reflects only one thing, your state of mind. And the loop you're trapped in, it doesn't start on the screen. It starts in your nervous system, in your fight or flight, in that desperate, quiet place inside that just wants to be right. Welcome to the loop, not the one in your strategy, the one in your soul. This video isn't here to give you another tactic. It's not another trading hack. It's not about entries, exits, or some secret edge. It's a mirror, a confrontation. It's a conversation with the part of you that's tired of losing for the same reasons, even when you know better. You're not here by accident. You clicked this because something in you knows there's a deeper layer you haven't faced yet, a part of this game that's playing you. And if you're brave enough to stay, you're about to see why no system, no mentor, no tool will ever save you until you face these loops. Because they don't just destroy your trades, they destroy your confidence, your discipline, your belief that this path is even possible. But here's the good news. Once you see the loop, you can break it. Not all at once, not overnight, but piece by piece, breath by breath, journal by journal. This is not a quick fix. This is a wake-up call, and it starts with recognition. So take a deep breath, let your guard down. You won't be judged here, only reflected. This is your mirror, and what you're about to see might hurt, but that's how healing begins. Let's start with something that feels innocent. A win. The market moves your way. You're in the green. Your screen lights up with confirmation, and something deep inside you starts to whisper, you've got this. That one win becomes two, then five. You start walking differently, sitting taller. The confidence creeps in, not loud, but persistent. You stop double checking your risk. You loosen your stop. You increase size, just a little, then more. The thought grows louder. Maybe I finally cracked it, but you didn't crack anything. You just flipped a coin, and for a moment, it landed heads. This is how the first loop begins, not with failure, but with false success. Because most traders don't blow up after a loss, they blow up after a win. But not just any win, a string of wins they didn't fully earn. Wins that came from randomness, not repeatable process, from lucky timing, not skill. And the worst part, they don't even realize it. They think they've leveled up, evolved, become the real deal. But what they've actually built is a house of ego on a foundation of sand. This is the false win loop. It's the emotional high that comes from victory without wisdom. And once you taste it, you chase it. You want it again. You expect it. You feel sharp, tuned in, untouchable. But what you're actually experiencing is miscalibration. Think about it. If you gave a toddler a gun, and the first time he pulled the trigger, a balloon popped and everyone clapped, what lesson did he learn? Not caution, not awareness, not discipline. He learned to fire again. And that's how most new traders get rewarded. Not for doing something right, but for surviving something wrong. And the lesson that gets planted? More risk equal more reward. Size up, win bigger. I'm good at this. But that win didn't teach you how to lose. And if you don't know how to lose, your next lesson will be brutal. Because when the market flips, and it always does, You're not prepared. You're not positioned. You're not humble. You're wide open. And that first real loss, it doesn't just hit your account, it hits your identity. You don't just question the trade, you question everything. Was I just lucky? Did I ever really know what I was doing? Why can't I repeat what worked before? That moment is critical because in that moment, you either start learning or you start looping. And most traders, they loop, they chase the win again. They force trades, they double down, they say things like, I just need to get back in rhythm. It worked before, it'll work again. I've got this. But rhythm isn't real when you're dancing to the beat of delusion. Here's a truth that hurts. Early wins are not signs of talent. They're emotional traps. The traders who survive are the ones who lose early and learn fast. The ones who win early, they usually crash, and they crash hard. They build ego, not process. They build confidence, not consistency. They inflate belief without installing structure. It's the classic lottery winner curse. Win too fast and you lose everything later, just with more drama. So if your journey started with a bang, ask yourself, what did I actually learn from that win? Did I learn how to protect myself or how to chase more? Because a win that doesn't teach you how to lose is a setup in disguise. Here's the paradox. Your best win might be the one that convinces you to overtrade, over risk, and ignore the rules that kept you safe. So when the losses start coming, and they will, they don't just hit your capital, they hit your pride, your expectations, your need to be right. And in that gap between who you thought you were and what the market just showed you, a storm brews. You start clicking faster, scanning harder, doubting more, not because of the chart, but because of the identity you built too soon, too fast. And that's the loop. False win, ego growth, overconfidence, losses, identity crisis, desperate trades, repeat. You don't need another win. You need a reset. You need to break the belief that winning means you're ready. Because the real trader isn't the one who celebrates early wins, it's the one who survives them. So next time you catch a green streak, stop and ask, am I building skill or am I feeding the loop? You weren't even planning to trade today, but you opened the chart anyway, just to check in. And then you saw it. A bullish candle, strong, clean, moving exactly like you imagined it would. Your pulse jumps. If I had just entered, that thought doesn't stay a whisper, it roars. You zoom in, you calculate quickly, you imagine where your entry would have been, what your profit could have been. You weren't supposed to trade, but now you have to, because you're not afraid of missing the trade. You're afraid of missing the feeling, that feeling of being right again, of catching the move, of not being the one left behind. And just like that, the loop tightens. This is the FOMO trigger. It's not just fear of missing a trade, it's the fear of missing redemption. You've had losses lately, or maybe you sat out during a rally. You feel like everyone else is eating while you're starving. Like trading is a race and you're watching from the sidelines. Every green candle feels like someone else's success and your failure. You tell yourself, if I just catch the next move, I'll be back. But that thought, it's a trap because now you're not trading from your system. You're trading from your scars. Let's be honest. When was the last time you entered a trade because it was in your plan versus entering because you couldn't stand watching anymore? If you're like most traders, it happens more often than you'd like to admit. And here's what's worse. Sometimes those FOMO trades win. And when they do, that's when the real danger begins, because now your brain learns a new rule. Desperation is a valid entry signal. So next time the chart moves without you, your instincts don't say, wait. They scream, go, and you obey. You shrink your reasoning, you expand your risk, you widen your stop, you slap the setup label on what's really just a reflex. Because underneath it all, you're not chasing profit, you're chasing relief. You want the anxiety to stop. You want to feel back in the game. You want to undo the regret, and your brain only knows one fast way to get that feeling. Enter the market. Any market. Right now. But here's the truth. The trade you're about to take isn't yours. It belongs to the version of you who was calm, prepared, objective. You're emotional, you're late, and deep down, you know it. Even if the trade goes green, you've already lost because you just reinforced the loop. One impulsive trade turns into two, then three, and then the worst thing happens. One of them wins. Now you're not addicted to your process. You're addicted to chance. You begin to blur the line between intuition and impulse, between discipline and desperation. You tell yourself, this feels right, but it's not instinct, it's panic dressed up as confidence. Let me tell you about Marcus. He was consistent, calm, process driven, until one day gold pumped $40 in 10 minutes. He'd marked the zone, he had alerts, he did everything right except act. He missed it. And that one candle, it shattered something. He chased the next move, then another. He lost $8,000 in a single day. When I asked him why he kept clicking, he said one sentence I'll never forget: because it felt like my move and I missed it. But the market doesn't owe you anything. No candle is yours. No setup belongs to you unless it aligns with your system, your rhythm, your readiness. The second you believe otherwise, you stop trading your edge and start chasing ghosts. So pause. Ask yourself, what are you really afraid of missing? The money, or the moment when you finally feel like you're back in control? FOMO isn't just a trading error, it's an identity crisis. You're not chasing a chart, you're chasing your old self, the one who felt sharp, calm, in sync. But here's the paradox: the more you chase that feeling, the further you drift from the state of mind that created it. So, what's the cure? Stillness, not reaction, not urgency, but presence. The kind that says, yes, the market moved, but I didn't miss anything because it wasn't my trade. That's how you break the loop, by understanding that discipline isn't silence, it's power. And the market, it always rewards those who are willing to wait. You think you're the one in charge. You're the one who clicks the button, draws the zone, places the stop, sizes the risk. You built your layout. You chose the indicators. You refined the entries. You're in the pilot seat, right? But what if I told you your cockpit isn't even connected? What if the buttons you keep pressing are just there to make you feel in control, while the real engine of your decisions is something far deeper, far more unconscious? Welcome to the control illusion. This loop doesn't scream, it doesn't rage, it seduces. It wraps itself around your system like a warm blanket of logic, while quietly feeding you decisions based on fear, not awareness. Because here's the uncomfortable truth: most traders don't trade from control, they trade from reaction. But admitting that, it's terrifying. So we build systems, not to trade better, but to feel safer. We color our zones, we double confirm with indicators, we ritualize our screens like altars. If I just add one more filter, one more tweak, maybe this time I'll be right. It feels productive, precise, scientific. But underneath it all is one thing: discomfort with uncertainty. And so the illusion grows. We think, if I get it all just right, I can remove the unknown. But trading doesn't work that way, because the market isn't a machine, it's a mirror. And every time it disobeys your expectation, every time a perfect setup fails, you don't just lose money, you lose certainty. You say things like, that wasn't supposed to happen. The setup met every condition. This shouldn't have failed. But when you say those words, what you're really saying is, the market was supposed to protect me. That's the root of the illusion. You start needing the chart to behave, not because it's rational, but because you've built emotional safety on top of fragile assumptions. And when that safety is shattered, your need for control kicks in stronger than ever. You double size, you remove your stop, you enter early, exit late, and call it conviction. But what you're really trading is anxiety, fear, wearing the mask of logic. Let me tell you about Naomi. She was disciplined. She had a back-tested system, logged every trade, reviewed every week. But then one bad week hit, 3 losses in a row. She didn't just feel frustration. She felt threatened, not financially, psychologically. She couldn't accept the randomness. So she interfered. She added filters mid-trade, cut winners short, added confirmation after entry, changed her process on the fly. And just like that, her edge dissolved. Not because the market changed, because she did. She couldn't let go of control. And so she tried to grip tighter. But trading is like holding sand. The tighter you squeeze, the more it slips through your fingers. And here's the irony that hurts: the more you try to control the market, the less control you actually have. Because now your decisions aren't based on your edge. They're based on your fear of losing. You no longer execute, you negotiate with your emotions. So ask yourself honestly, are you following a system, or are you building a fortress against unpredictability? There's a difference. One is grounded in reality. The other is built from your refusal to accept it. True control in trading doesn't come from manipulating outcomes. It comes from regulating yourself, from knowing your risk and accepting it, from having a plan and sticking to it even when it hurts, from letting the market be what it is and choosing how you respond. You don't control the candles, you control the click, the pause, the reaction, the walk away. And that's more powerful than any prediction. Because the traders who survive long enough to thrive, they aren't the ones who conquer the chart. They're the ones who surrender to uncertainty without surrendering their discipline. They understand trading isn't about controlling the market, it's about not letting the market control you. So, next time you feel the need to jump in, change a rule, override your plan, ask yourself, am I trading because I see the setup or because I need to feel in control again? If it's the second, pause, because that's the moment when the loop tries to take over. And if you can pause just for a breath, you start to break it. It doesn't feel like revenge at first. It feels like justice. The chart was unfair. The stop was too tight. That wick, clearly manipulation. You don't say it out loud, but you feel it in your chest. They can't do this to me. I'll get it back. I deserve this. And just like that, you're not trading a setup anymore. You're trading a grudge. Welcome to the revenge rerun. This is the loop that feels the most justified, acts the most logical, and does the most damage. Because unlike FOMO, which stems from anxiety or the illusion of control, which comes from fear, revenge is rooted in rage. Not always loud rage, sometimes quiet, simmering, silent. But make no mistake, it burns, and it will burn through your capital, your logic, your future, unless you catch it in time. Here's how it usually starts. You take a loss, maybe justified, maybe random. You pause, you feel it rise, and instead of walking away, you reload the same pair. You re-enter too soon. You double your size. You don't wait for confirmation. You tell yourself, I'll show this market. I'll teach this chart a lesson. But charts don't care. Markets don't care. Markets don't remember. And your account? It doesn't know whether your trade is based on strategy or spite. It just reacts. Let me tell you about Jamal. He was up 3,500 disciplined execution, then hit. He took a textbook short on E or USD. Perfect entry, reasonable stop. It wicked him out by 1 pip. He stared at the screen, jaw tight, said nothing. Then he entered again. Twice the size, no confirmation, no patience. It dropped. He got stopped, entered again. By the end of the day, he was down $6,800. When I asked him what happened, he didn't explain the setup. He didn't mention risk. He just said, I couldn't let the week end like that. That's revenge. Not fire and fury, but a narrative, a need to rewrite the ending right now, no matter the cost. And the worst part, sometimes revenge trades win. You double size, enter full emotion, and you catch green. And in that moment, you just taught your brain the most dangerous lesson of all, that anger can be profitable, that emotion is a tool, that fixing it fast is better than healing slow. And that's how revenge becomes a loop. Loss, anger, overreaction, bigger loss, shame, repeat. You don't even realize it at first. You say you're just getting back in sync. You call it a high conviction setup. But underneath, you're bleeding through your keyboard. And the pain isn't coming from the loss, it's coming from the story you attach to the loss. Because in that story, you were wronged. And now you need resolution. You don't want profit, you want closure. But trading doesn't give you closure. It gives you probability. It gives you process. And if you ignore those, it gives you pain. So what's the way out? You don't fight back. You step back. You journal. You walk. You breathe. You treat the loss like data, not disrespect. Because not every trade deserves a reaction. Not every red candle needs a comeback. Some of your most powerful trades will be the ones you don't take, especially the ones that come after you've been hurt. Let that sink in. Ask yourself, the last time I entered after a loss, was I following my plan or was I following my pain? Because if your trigger to enter is your need to make something right, then you're not trading anymore. You're in a loop. And here's the hardest truth of all. Trading from revenge doesn't just punish your account. It punishes your future self. The version of you who will wake up tomorrow and wonder why today had to be so expensive. You think you're fixing the past, but you're just borrowing grief from the future. So next time you take a loss, pause, not to analyze the chart, but to analyze you. Ask, what story am I writing right now? Do I need to enter this trade, or do I need to let go of needing the last word? Because trading isn't a movie. You don't need a dramatic comeback to be the hero. Sometimes being the hero means closing the platform, walking away, and letting the market move on without you. And if you can do that, you've just done something few traders ever manage. You ended the loop before it wrote another chapter. You tell yourself it's logical. This strategy just doesn't fit me. That system wasn't built for this kind of market. I've evolved. It's time for something more advanced. So you switch. You leave the structure you once believed in. You chase a new name, a new method, a new framework, but you're not evolving. You're looping. Welcome to the strategy switcher loop, where learning is actually avoiding, where growth is just an escape route dressed in confidence. Here's how it begins. You find a strategy. You commit, at least on the surface. You study the rules, watch the videos, maybe even see a few wins. But then the drawdown comes. Maybe a week, maybe a month, a few red trades in a row. And that discomfort you thought you were ready for, it shows up in full force. You start doubting. Maybe this setup doesn't work in this market. I just need something more reliable. I should be further along by now. So you do what feels natural. You move on to something cleaner, sharper, more complex, more respected, and in the moment it feels right. But here's the truth. You didn't change strategies because the last one failed. You changed because it stopped feeling good. Because deep down, you weren't willing to sit with not being good yet. You weren't willing to endure the boring part, the part where mastery is forged. See, mastery isn't exciting. It's repetitive, it's slow, it's dry, technical, often frustrating, and that doesn't feed your need to feel like you're progressing. But switching does. Every new strategy feels like momentum, like clarity, like possibility. For the first few days, maybe even weeks, you feel in control again. But then the next drawdown hits and the loop begins again. Let me tell you about Liam. He switched strategies every 2 weeks for 6 months, from price action to RSI, from SMC to Wyckoff to ICT, then back to keep it simple, support and resistance. He told himself, I'm adapting to the market. I'm refining my edge. But what he was really doing was avoiding discomfort. Every red trade wasn't feedback. It was a threat, not to his capital, but to his identity. He needed to feel like someone who'd figured it out, and any drawdown said otherwise. So he kept running, not toward better strategies, but away from responsibility. Because when you blame the method, you don't have to look in the mirror. You don't have to ask, did I follow the rules? Did I size properly? Did I truly give this a chance? Instead, you blame the strategy. It's easier, cleaner, painless, but it keeps you stuck. Because every time you reset your progress. You learn just enough to feel hopeful, but not enough to become consistent. It's like switching languages every week and wondering why you never become fluent. So here's a tough question. How many strategies have you tried in the last year? Be honest. Write the number down. Say it out loud. You may think you're evolving, but if you've changed your approach 6, 8, 10 times, you're not learning, you're running. And the market sees it. Because the market doesn't reward variety, it rewards consistency. It doesn't care how many names you've memorized, how many Discord groups you're in, how many YouTube backtests you've watched. It only cares. Can you execute your system dinners the same way every day, rain or shine, confidence or doubt? If you can't, it's not your system that's broken. It's your process. And that process will never take root if you keep replanting the seed every time a cloud rolls in. Here's a simple test. Can you write your system on a napkin, clearly, confidently, without buzzwords? If you can't, you don't have a system. You have noise. So how do you escape this loop? You stop looking for the perfect strategy and you start building the perfect relationship with a single method. You stop asking, does this work? And start asking, can I work this? Because at the end of the day, it's not about what you trade. It's about how long you can stay loyal while still losing. That's the measure of readiness. Not in results, but in resilience. So the next time you feel the itch to switch, pause. Ask yourself, am I being strategic or am I being scared? Because until you can sit inside a drawdown without running, you'll never sit long enough to rise. You could be doing everything right. You could have a strategy that's proven, a system that works, rules that are clear, entries that make sense, and still you lose. Not because your method is flawed, but because your method wasn't built for someone like you. This is the style mismatch, the invisible loop most traders never even realize they're stuck in. Not because they're lazy, not because they lack discipline, but because they're trying to force themselves into a mold that doesn't fit. Let's get something straight. Trading isn't just technical, it's biological, it's emotional, neurological, rhythmic. Every human being has a unique pattern of attention, stress tolerance, energy, and decision making speed. And when your trading style contradicts your nervous system, your default mental wiring, it doesn't just feel hard, it becomes unsustainable. You might be a deep thinker, someone who needs time, space, a long runway before making a decision. But you force yourself to scalp the 1 minute chart because that's what you saw on YouTube, because the Discord group celebrates fast wins, because someone you admire does it and makes it look effortless. But for you, it's chaos. Every candle feels like an attack. Every entry feels rushed. Your mind doesn't have space to breathe, so it panics and you call it bad discipline. But it's not bad discipline. It's a style mismatch. Or maybe you're the opposite. You're decisive, fast, intuitive, but you try to become a swing trader, holding positions overnight, waiting for days. You convince yourself patience is the secret. But while you wait, your confidence deteriorates, your edge dulls, you start seeing entries that aren't there just so you can take action, not because the market is moving, but because you need movement. Again, it's not your fault. The industry tells you to master your emotions, to adapt to any style, to be like water. But what if the real path isn't mastering emotions, but understanding your nature? Take Jess. She followed a mentor who traded daily breakouts. He'd wait hours, sometimes days, for the perfect setup. Clean, precise, ruthless with patience. Jess tried to copy him. Same entry model, same rules, same time frame. But every hour of waiting drained her. Not her capital, her confidence. She didn't feel in control. She felt trapped, like she was pretending to be someone else every time she opened the chart. Eventually, the pressure cracked her, not because the system failed, but because her nervous system couldn't handle it. That's what happens when you trade out of alignment. You don't just lose money, you lose yourself, and you start to believe the problem is you. But it's not. It's the shoes you're wearing. They don't fit. Imagine signing up for a marathon when you're built for sprints. You train, you try, you grind, but every mile feels worse than the last, not because you're weak, but because you're in the wrong event. You don't need more discipline. You need a different distance. Here's the reframe no one tells you. Your personality isn't a flaw to overcome. It's a blueprint to follow. If you need fast feedback, maybe you're a scalper. If you need space to think, maybe you're a swing trader. If you hate overnight risk, maybe you need intraday setups. If you feel anxious when watching the chart, maybe you need to automate. There is no right style. There is only the right style for you. So how do you find it? Ask yourself the questions no trading book asks. When do I feel the most clear? Do I thrive in motion or in stillness? Does waiting empower me or erode me? Do I need control or flexibility? Do I feel stronger when I act quickly or when I plan deeply? And most importantly, can I see myself executing this same approach for the next 5 years without burning out? Because if the answer is no, then the style may not be sustainable, no matter how profitable it looks on someone else's Instagram. Let me be brutally honest. You can follow every rule and still sabotage your success if the method isn't wired for your mental rhythm. That's why some traders blow up, not from recklessness, but from self-denial. They think the goal is to fit the strategy. But the real goal, build the strategy to fit you. Because when you try to copy someone else's system, you're not just copying their method, you're copying their mind. And if your internal world doesn't match theirs, you're going to feel friction. Maybe not today, maybe not this month, but eventually that friction turns into failure, and you won't even know why. So here's your call to action. Before you refine your entry, before you backtest another setup, before you buy another course, ask yourself, is the way I trade a reflection of who I really am? Because when you stop pretending, when you stop forcing, that's when clarity returns. That's when calmness returns. That's when consistency begins. And you'll realize the system was never the edge. You were. You didn't lose because the setup was wrong. You didn't lose because the chart faked you out. You didn't lose because of manipulation or news or the broker. You lost because you risked too much. And worse, you knew it, but you clicked anyway. That's the silent killer of trading, not your entry, not your strategy, not your psychology. It's the risk you never respected, the position you sized up just this once, the stop you widened because it can't reverse now, the trade you took with 3 times your normal risk because I really believe in this one. You don't say it out loud, but inside you whisper, I need this to work. I can't afford for this one to fail. I deserve a win here. And in those moments, you stop being a trader. You become a gambler with a narrative. Because here's what most traders never fully grasp: risk is the only thing you truly control. You don't control the candles. You don't control the news. You don't control the outcome. The only lever in your hand is how much you're willing to lose. And yet, it's the lever most traders treat like a toy. They flex it, override it, negotiate with it based on how they feel, not what they've tested. Calm, 1%. Confident, 2%. Frustrated, 5%. Desperate, full account. That's not a system, that's emotional roulette. And it's only a matter of time before the market lands on red when you've pushed all your chips onto black. Let me tell you about Matteo. He built his $10,000 account slowly, carefully, one trade at a time. Then came the slump, a month of chop and progress, just drawdowns and doubt. Then one day, a breakout appeared. Textbook, clean structure, clear confirmation, and Matteo felt it rise in his chest. This is the one. This will get me back. So he went all in. He maxed the leverage, moved the stop tighter than usual, told himself this will restore the momentum. The trade failed instantly. One candle, gone. $4,700 erased in seconds. When I asked him why he sized up, his answer was painfully honest. I wanted to feel like I was progressing again. That's the loop. Not risk management, risk avoidance, not growth, compensation. Because oversized trades rarely come from greed. They come from stagnation, from feeling stuck, from the pressure to catch up, to make up for time, to close the gap between who you are and who you thought you'd be by now. But here's the hard truth. You can't speed up progress by risking more. You can only destroy it. Risk isn't the enemy of growth. It's the cost of sustainability. Without it, you're not building anything. You're just lighting matches in a forest and hoping not to start a fire. So how do professionals treat risk? They don't think in winning trades and losing trades. They think in risk units. They know even the best setups can fail. Their edge plays out over 100 trades, not 3. One oversized loss can traumatize their psychology and sabotage the next 20 trades. They respect risk not out of fear, but out of awareness, because the market doesn't punish mistakes. It punishes sized mistakes. A 1-hour loss is learning. A 5-hour loss is pain. A 10-hour loss is identity crisis. And that crisis, it rewires your brain. You start hesitating. You stop trusting your edge. You tighten entries. You exit too early. And suddenly, the next normal trade feels dangerous. That's how one bad risk decision infects your entire system. So how do you prevent it? You anchor risk before the trade, not during it. You set your size when you're calm, not when you're emotionally invested. You ask the most powerful question in all of trading: what if I'm wrong? Not pessimistically, but mathematically, because being wrong isn't a problem. Being unprepared to be wrong is. So here's your rule of thumb. If your position size changes based on emotion, not data, you're not trading. You're negotiating with chaos. And the market, it doesn't negotiate. It takes what you offer. And if you offer too much, it will take everything. So next time you feel the itch to size up, to press harder, to go for it, ask yourself, am I trading probability or am I chasing validation? Because when risk becomes about feeling better, you've already lost, no matter how green the chart turns. Trading isn't about winning big. It's about surviving long enough to let your edge work. And if you can do that, if you can respect risk more than your own desire to be right, you give yourself the one thing most traders never earn: longevity. And that's where real freedom begins. You remember the trades that hurt, or at least you think you do. You tell yourself you've learned, that the pain taught you, that next time you'll do better. But here's the truth no one likes to admit. Memory lies, emotion edits, and what you think you remember is often just the version your ego can live with. This is the loop of the journal you never wrote, the one where your lessons vanish, your growth stalls, and your mistakes become habits because they're never brought into the light. Most traders say the same thing: I don't have time to journal. I already know what I did wrong. It's in my head. But if it's only in your head, it's not real. It's fleeting, corrupted, filtered through shame, pride, and rationalization. That one loss you swore you'd never repeat, you repeated it. Why? Because you didn't record it when it mattered. You didn't capture how you felt before you clicked, what you were hoping for, what you were afraid of, where the tension was coming from. You just moved on. You didn't forget the trade. You forgot yourself in the trade. That's the difference. A journal isn't about collecting stats. It's not about win rate, risk to reward, or setups. It's about self awareness. It's where your unconscious loops become visible. It's where you stop being the character in your story and start becoming the author. Let me show you how this plays out. Elena had been trading for years. She knew price action, had a system, but she couldn't string together 2 green weeks. She was stuck, not blowing up, just hovering in frustration. Then she did something simple. Every day, after every trade, she wrote down 3 questions. 1, what was I feeling before this trade? 2, what was I hoping for? 3, what was I afraid of? That was it. No spreadsheets, no performance dashboard, just raw emotional reflection. And after 30 days, the pattern appeared. Every time she skipped her morning routine, she overtraded. Every time she forced a trade after a loss, she ended red. It wasn't her edge, it wasn't her strategy, it was her patterns. Patterns she never saw until she wrote them down. That's the power of a journal. It doesn't just track behavior, it confronts it, because when you see your own loops on paper, you can't unsee them. You can't lie as easily. You can't pretend it was the market's fault. You can't rationalize the same excuse. And that's where real transformation begins. Here's the truth. Your breakthrough isn't in your next setup. It's buried in the last trade you refuse to face. But if you never write it down, you never mine the gold from your breakdowns. You repeat, you recycle, you relive the same mistakes just with new chart patterns, and eventually you call it experience. But experience without reflection, that's just repetition. And repetition without clarity, that's a loop. So, how do you break it? Start journaling, not as a trader, as a witness to yourself. Start simple. What was I feeling before the trade? What did I fear during the trade? What part of me wanted to click? Don't edit. Don't justify. Don't turn it into a performance. Just tell the truth, even if it's ugly, especially if it's ugly. Because writing is slowing down, and slowing down is the enemy of reactivity. When you write, you create a pause, a space, a mirror. And over time, that mirror starts reflecting patterns before they play out. You begin to recognize, I've felt this before. I know where this leads. I don't have to enter this loop again. That's how journaling becomes a weapon, not of precision, but of awareness. And if you're not journaling, you're not evolving, you're just surviving. You're getting by, hoping each day is better, but never building the structure that guarantees growth. So here's your challenge. Tonight, before the next trade, write 1 page, not about what the chart did, but what you did. Who showed up at the screen? What were you trying to prove? What part of you needed that trade to work? And tomorrow, write again. Even if it's 2 sentences, even if it's uncomfortable, especially if it's uncomfortable, because that's the page that breaks the loop. It happened fast. You were planning your trade, maybe even mid-click. Then, boom, the candle exploded. Wicks in both directions, spread doubled, your stop was gone before you could even react, and your brain screamed, that wasn't fair. The news ruined my setup. No one could have predicted that. But here's the truth. The candle didn't lie. The news didn't betray you. You did. You told yourself the setup was clean. You told yourself the market was calm. You told yourself you were objective. But deep down, you were already leaning, already hoping, already primed to see what you wanted to see. The news didn't kill your plan. It revealed your illusion. This is the news candle loop. It's the story we tell ourselves after the damage is done, so we can avoid confronting the story we told ourselves before it happened. And this loop is dangerous not because of the news, but because of how you respond to it. Because let's be honest, most traders don't get trapped by fundamentals. They get trapped by their refusal to accept uncertainty. Let me show you how the loop forms. You analyze the chart all morning. Structure lines up, momentum looks clean, you enter. But NFP is in 15 minutes, or CPI or FOMC or Powell is speaking, and you know it. But you tell yourself it's already priced in. This isn't a big one. Price action is king, news is noise. You click, the number drops. The market does the exact opposite of what you expected. Violently. You get wicked out, or worse, slipped. And suddenly your setup, your edge, your plan all feel meaningless. But here's the thing. It wasn't randomness. It was you hoping that this time volatility would obey your bias. You don't journal it, you don't reset, you re-enter, no confirmation, no plan, just reaction. And just like that, the news event becomes a trigger, not for market movement, but for loop activation. Let me tell you about Darren. He built a strategy specifically for fading news spikes. Rules, filters, timing windows. It worked when he followed it. But then he got cocky. This CPI isn't a big deal. Market structure is still holding. I can front run this one. So he entered early, slipped, stopped, entered again, lost again. And afterward, he didn't question himself. He blamed the system. That's how the loop hides. You don't blame your emotion. You blame the structure that failed to protect your delusion. But here's the deeper truth. The news didn't hurt you. Your need for certainty did. Because uncertainty is the default state of trading. It's the environment we operate in, not the exception. The real danger isn't volatility. It's your resistance to accept that you'll never know what's next. You want clarity. You want logic. You want the idea that if you do everything right, things will go your way. But the market doesn't reward perfection. It rewards adaptability. So ask yourself, do you react to the news or to the meaning you assign to it? Because if the candle spikes against you and your first thought is, that shouldn't have happened, you're not trading the market. You're trading expectation. And when that expectation gets violated, you go to war, not with the chart, with yourself. You stop trusting your system. You avoid high impact days. Then FOMO kicks in. You chase after the ones that move, and the loop deepens. Eventually, you start crafting rules not around probability, but around your emotional discomfort. And when that happens, you're no longer managing risk, you're managing fear. So what's the way out? Start seeing news events for what they are, a reminder that you're not in control. And that's okay. The pros don't avoid volatility. They respect it. They know when to step aside, when to reduce size, when to sit out, by design, not emotion. The amateurs, they either blindly avoid or blindly attack. Both are reactions. Neither is strategy. So next time you see a high impact event coming, stop. Ask, do I want this trade to work more than I'm willing to accept the risk of chaos? If the answer is yes, you're already compromised. Because trading isn't about avoiding unpredictability, it's about being grounded inside it. The news doesn't lie, the candle doesn't lie, they just reflect what's already inside you. If you can accept that, you take your power back, because the strongest trader isn't the one who always knows what's coming, it's the one who never needs to. You were right, technically. The setup was there, the pattern looked perfect, all the signals lined up. You entered with confidence, structure was clean, momentum was in your favor, and yet, it failed. Again, you double-check the entry, the stop, the logic. Everything makes sense until you zoom out. And there it is, a massive supply zone on the 4-hour, a dominant downtrend on the daily. Your beautiful scalp was swimming straight into a tidal wave. This is time frame blindness, a loop of false precision built on narrow vision. It doesn't start with ignorance, it starts with overfocus, with the desire to be so accurate, so exact, so dialed in that you zoom in further and further and further, until you're no longer trading the market, you're trading micro movements disconnected from context, logic, and rhythm. Every 1-minute candle feels like a verdict. Every pullback feels like betrayal. Every wick looks like a trap, because when you're zoomed in that close, you stop seeing waves. You start reacting to ripples. And ripples, they lie. They mimic structure, they mimic momentum, they lure you into trades that look perfect on the micro, but collapse the moment the macro reasserts its presence. Let me tell you about Vanessa. She was a sniper on the 5-minute chart, clean entries, precise exits, great risk to reward ratios. But every winning streak ended the same way, one big red candle. One trade that wiped out 3 days of profits, not because her entry was bad, but because her context was missing. She never checked the daily, never mapped the weekly, never asked, am I trading with the current or against it? She was technically skilled and still trapped. Because no matter how sharp your edge looks up close, if it's misaligned with the higher time frame, it's swimming upstream, and the current always wins. Here's why this loop is so dangerous. It makes you feel powerful. It gives you quick feedback. You think lower time frame is more control, but the truth is, lower time frame pulls more noise, and the more noise you absorb, the more you mistake randomness for signal. You start anticipating every little flick of the market. You try to trade every breath the chart takes, and in doing so, you forget the heartbeat, the rhythm, the flow, the big picture structure that defines where pressure is building and where it will snap. Here's what most traders never ask. Would this trade still make sense if I lost all lower time frames? Could you take the same position if all you had was the 4 hour, the daily, the weekly? If the answer is no, then you're not in alignment. You're just reacting to what's in front of you. You're inside the chart, but blind to the landscape because the market isn't hiding information, it's just stacked. And if you only read one layer, you'll always misread the rest. It's like judging a novel based on one sentence, out of context, out of tone, out of truth. So what's the fix? Zoom out before you zoom in. Let the higher time frames set the tone. Map your zones from the top down. Ask, where is pressure building? Where are buyers and sellers actually in control? Am I trading with momentum or pretending I can reverse it? When you do this, something powerful happens. You stop reacting to every candle. You stop panicking over pullbacks. You stop chasing every wiggle. You start to feel something rare, stillness, not indifference, but calm. You understand where you are in the story. And because of that, you don't need to guess what happens next. You don't need to force the plot. You let the market write it, and you participate with precision. And that's when you realize the goal isn't tighter entries, it's deeper understanding. Because when you align across time frames, you don't just trade with better setups, you trade with more peace. And peace, that's the edge most traders never find. So here's your challenge. Next time you find a perfect setup, don't click, zoom out, check the context, check the story, and ask, does this trade still make sense if I stop pretending I know everything? If it does, beautiful. If it doesn't, you just escaped a loop before it even began. At some point, winning stops giving you a high. You still want to succeed. You still care about results, but something shifts. The rush fades. The chase quiets. The voice that used to scream, you need this win, goes silent. And in that silence, something unexpected arrives. Peace. Welcome to the final exit, the last loop, and for most, the most difficult to break. Not because it's loud, but because it's subtle, because it doesn't feel like a trap. It feels like you. Let's rewind. Think about why you started trading. Maybe it was freedom, or money, or control, or proving something to your parents, your boss, your past, your self-worth. Whatever it wasn't just about the charts. It was about identity. You weren't just placing trades, you were building a new version of you, one who wins, one who escapes, one who knows something others don't. And for a while, that identity keeps you alive. It drives the studying, the sleepless nights, the obsession. But eventually, it becomes a weight. You start needing the market to validate who you are, not to confirm your analysis, but to confirm your value. And when it doesn't, you crumble, you overtrade, you force, you sabotage, but because of the setup, the outcome threatens your sense of self. You're not taking a loss, you're being told you're a failure. That's the final loop. Not psychological, not strategic, existential. You are trapped in the belief that if I'm not winning, I'm not worthy. If I'm not consistent, I'm a fraud. If I walk away now, I've wasted all this time. So you stay, you push, you grind, even when it hurts. But here's the paradox. The harder you grip this identity, the more fragile it becomes until one day you let go. Not with defeat, with relief. You stop chasing validation, you stop chasing highs, you stop needing the chart to tell you who you are. And when that happens, something magical takes its place. Neutrality, not indifference, not numbness, just presence. You don't enter to prove, you enter because it's time. You don't exit to lock in a feeling. You exit because the trade is done. Your charts become quiet, your process becomes boring, and your results, they become steady. Let me tell you about Raphael. He blew 4 accounts over 6 years. Every time, it was the same loop. Hope, overconfidence, loss, desperation, blow up. Until one day, he stopped. He took a full year off, not to study the market, to study himself. He read his journals, his mistakes, his motives. When he came back, he did something radical. One pair, one setup, once a week, no alerts, no chat rooms, no hype. He became invisible, and his results, they exploded quietly because he didn't need trading to give him something anymore. He brought something to it instead. That's the final exit. When you stop needing the market to make you whole, when you stop thinking that every trade is a referendum on your potential, and the moment you step out of that need, the market starts to give you what you were chasing all along, not because you forced it, but because you finally stopped standing in your own way. Here's the ultimate irony. The less you need to win, the more you win, because now you're focused on process, not outcome. Now you manage risk because it's smart, not because it's safe. Now you journal because you're curious, not because you're guilty. Now you can sit through red days without needing revenge. Now you can skip a trade without fear of missing out. Now you can hold a green streak without increasing size out of ego. You are no longer chasing dopamine, you are practicing mastery. And that mastery, it feels quiet, almost boring. But boring is beautiful because when trading becomes boring, that's when you've truly stepped into freedom, not financial. Psychological, the ability to walk away on a red day and smile, to take a loss and not need to fix it, to see a perfect setup and pass on it because your rule said so. That's not weakness. That's control of the only thing that ever mattered, yourself. So what now? You've seen the loops, you've walked through them one by one, layer by layer. Some stung, some exposed something raw, something true. And now you know. The loop never truly disappears. But now you see it. And when you can see the loop, you can step out of it. You've just walked through 11 invisible traps. Not one of them was on your chart, not in your entry, not in your exit, not even in your strategy. They were in your mind, in your habits, in your history, in your heart. You've seen how trading isn't just technical, it's emotional, not just analytical, but deeply, painfully psychological. You felt the loops, the false win that built confidence without foundation, the FOMO trigger that tricked you into rushing redemption, the control illusion that made you believe your rituals could protect you from randomness, the revenge rerun that punished your future for the pain of your past, the strategy switcher that gave you novelty instead of mastery, the style mismatch that asked you to wear shoes that never fit, the risk you never respected, the silent destroyer of accounts and confidence, the journal you never wrote, your forgotten map to self-awareness, the news candle that lied to you, or rather, revealed the lies you told yourself, the timeframe blindness that made you mistake noise for signal, and finally, the final exit, the point where you stop needing to win and start choosing peace. Let that sink in. Every loop was a mirror, some distorted, some uncomfortable, but all of them reflected something real. Because the market doesn't care what you say, it responds to who you are. It exposes your reactions, your patterns, your ego, your avoidance, your need for control, your unwillingness to sit with uncertainty. That's why trading is the ultimate psychological test. And most traders, they fail that test not because they're undisciplined, but because they've never been taught how to see the test in the first place until now. Because now you see the loop, and that changes everything. Let's be brutally honest. This isn't about becoming the perfect trader. That person doesn't exist. This is about becoming the honest trader, the aware trader. Because once you see the loop, you can name it. And once you can name it, you can interrupt it. An interruption, That's how transformation begins. So let me offer you something better than advice. Let me offer you a question. Just one. Before your next trade, take a deep breath. Then ask, what loop am I about to enter and am I willing to step out of it? Not a tactic, not a trick, a test of truth, a moment where you stop letting your past autopilot your future because every click has a story, every setup has a shadow, and every decision is a fork in the road, loop or liberation. And if you're brave enough to answer honestly, you'll start to feel something unfamiliar. You won't feel ready. You'll feel present. And in presence, there is power. Not the power to control the market, but the power to control your response to it. That's the edge no indicator can measure. That's the freedom no account size can buy. Because trading isn't just about making money, it's about making meaning, making peace, making yourself whole again. So don't let this video just be something you watch. Let it be a threshold from unconscious action to conscious awareness, from emotional reactions to intentional process, from performance obsession to peaceful execution. Because the market doesn't test your setup, it tests your self awareness. And now you're ready. Don't subscribe, don't share, don't even like. Instead, open your journal. Write this sentence. What loop am I about to enter, and am I willing to step out of it? Then below it, write the loop that's trapped you the longest. Write it with courage. Write it with honesty. Because someone out there needs to see they're not alone. Maybe you'll help them. Or maybe you'll finally help yourself. This isn't just about trading, it's about freedom. And freedom begins the moment you stop chasing profit and start protecting your peace.